After the intense strikes on Iran, President Trump has just announced a ceasefire. What does this mean for your crypto portfolio? Is this the buying opportunity you've been waiting for, or is more chaos ahead? The world was rocked this weekend as the United States launched a military strike on Iran, leading to significant geopolitical tensions. Iran quickly retaliated, escalating the situation further. Many feared the situation could spiral into a full-scale war. But in a surprising move, President Donald Trump just announced a ceasefire, signaling a potential end to this 12-day conflict. Now, with the dust settling, it's time to assess what this means for the global markets, especially the crypto space. And more importantly, how should you position your crypto portfolio in these uncertain times? As you can imagine, the markets reacted quickly. As soon as the strikes were reported, Bitcoin and the wider crypto market experienced a significant drop, losing billions in just a matter of hours. Bitcoin fell by about 5% over the weekend, causing panic among many retail investors. This is nothing new, though. Cryptocurrency markets are known for their volatility, especially when geopolitical events unfold. However, let's take a step back and look at the bigger picture. This is a dip, yes, but it is far from a catastrophic event for Bitcoin. In fact, Bitcoin's 24/7 trading model allowed it to react instantly when the news broke, unlike traditional stock markets that were closed over the weekend. When traditional markets opened, Bitcoin was already making a comeback, reflecting its resilience. Here's the thing, Bitcoin is fundamentally strong. Even though the news of the conflict shook the markets, the underlying value of Bitcoin and crypto hasn't changed. So, what's going on here? In the short term, geopolitical events and war tend to lead to market dips, but historically, these dips are followed by massive rallies. Take a look at past war events. The Iraq War, for example, caused a significant market drop, but after the initial shock, the markets went into a bull run, fueled by the need to print more money to fund the war efforts. The same thing happens after most wars. The market dips in response to uncertainty, but it recovers once things stabilize. Why does this matter for Bitcoin? Well, Bitcoin has always been considered a hedge against inflation and economic uncertainty. When central banks start printing more money to fund wars or other crises, Bitcoin's value tends to rise because it is a deflationary asset with a fixed supply. Unlike fiat currencies that can be printed endlessly, Bitcoin's supply is capped at 21 million coins, making it an attractive option during times of inflation and market instability. Now, you might be wondering, does this scenario sound familiar? It should. Throughout history, we've seen a consistent pattern. When wars break out, there's an initial shock, and the markets dip. But once the panic subsides, we usually see a sharp rebound. Look at past conflicts such as Pearl Harbor, the Gulf War, and even the September 11th attacks. Each of these events triggered a short-term dip, but all of them were followed by significant market recoveries. And here's where it gets even more interesting. Not only is this pattern observed in traditional markets, but Bitcoin follows a similar trajectory. As the market stabilizes and the dust settles, Bitcoin tends to bounce back stronger, with new buyers entering the market. This is partly because people start looking for safe haven assets, and Bitcoin is the perfect candidate. The interesting thing about Bitcoin, especially in situations like this, is its resilience. While the stock market and traditional assets fluctuate, Bitcoin remains a decentralized, global asset that isn't tied to any government or central authority. This gives Bitcoin an edge during times of geopolitical turmoil. Despite the short-term volatility, Bitcoin is still one of the best performing assets over the long term. Look at the numbers. Bitcoin has gained over 50% in the past year, and in the last 90 days alone, it's up by 15%. In the grand scheme of things, a 5% dip is just a minor blip on the radar for Bitcoin. Let's not forget, Bitcoin has already endured a lot in its short history, from regulatory battles to the financial collapse of major institutions. And each time it has come out stronger. The fundamentals are intact, and it continues to gain global adoption, both from institutional investors and retail traders alike. Now, you might be thinking, how does the stock market fit into this equation? Well, history shows that stock markets tend to go up during times of war. The reason is simple: governments print more money to fund military operations. This increase in the money supply tends to drive asset prices higher, including stocks, commodities, and, yes, Bitcoin. In fact, we are already seeing this with the global M2 money supply. As central banks increase the money supply, it often spills over into Bitcoin and other assets. The past few weeks have shown an increase in inflationary pressures, and this could ultimately help push Bitcoin prices higher. So, while the uncertainty surrounding the war and military actions is real, It could ultimately be a major bullish signal for Bitcoin. Let's get down to the key question. Should you buy Bitcoin now? Based on the current situation, the answer is yes, especially if you have cash on the sidelines. This is a major buying opportunity. As history shows, Bitcoin tends to recover quickly after geopolitical shocks. The market may experience some volatility over the next few weeks, but if you have a long-term outlook, this could be the perfect time to increase your holdings. Remember, Bitcoin has consistently proven that it's not just another speculative asset, it's a store of value, a hedge against inflation, and a digital asset that's becoming more widely accepted each day. So, if you've been waiting for an opportunity to buy, this could be it. In the coming days, as the political situation continues to evolve, we might see even more volatility in the markets. But don't let short-term fluctuations scare you away from the long-term potential of Bitcoin. Whether you're new to crypto or a seasoned investor, this could be the chance you've been waiting for to secure more Bitcoin at a lower price. So, what's next for your portfolio? The decision is yours, but one thing's for sure, Bitcoin's future remains bright. If you're ready to seize this opportunity, make sure you're subscribed to our channel so you can stay updated with the latest news, trends, and market insights. Thanks for watching. If you found this analysis helpful, hit the like button, share with your friends, and let me know in the comments how you're positioning your portfolio in light of these events. I'll see you in the next video.